Hello and welcome to the Silver Log. This should be two or the second of three videos for the weekend. One which is looking at the daily chart, this one for the hourly, and another for the more longer term perspective, and most likely one on gold also, because gold had an interesting day on Friday. Welcome and well, a lot of what I say is going to be we're in a neutral market. It can't be any more neutral than what I see, at least based on the mathematics of chart analyses. Resistance here at the 1 day moving average well below the declining 5. And well, it started to make this higher high and higher low. The resistance now at the 5, rising 1 day moving average. Things are looking up, and wow, it gets above it. Okay, so now we need to confirm. Now we need to confirm an uptrend. What we need to do is have a big, large mover consolidate either through time or through price down to the 5 and then break higher. Well, it did consolidate through time, and eventually it did go down to that 5 day moving average, found support, and got above this 1 day. And well, it didn't find support there, and then it even fell below the 5, but got above it, and uh, it's neutral. It's completely a major confirmed move of neutrality. And it's major confirmed move for neutrality. On every single one of the three charts I'm going to show you today, every single one is having a hard time with direction. Now, one of the things that I'm going to mention with gold is how it's reacting within its 5 day moving average, and if it can confirm an uptrend, gold that is within the 5, most likely silver is going to follow suit along with it, because it's tough to state, well, this neutrality is going to break itself to the upside or downside, because usually these things resolve themselves within the path of least resistance. But what is the path of least resistance? Obviously, long term it's higher, but on the more shorter term over the last month, it's way lower. So that's a neutrality basis right there. So what neutral plus neutral give you? Even more neutral. That's just based on the price action. Long term, this type of movement means absolutely nothing other than saying, I've been thinking for days, should I buy? It's been at this 35 level, it seems, for 3 days. Yes, that's its neutral equilibrium point. If you want to get in on a $15 off from the previous 50, it's not a bad time. Yes, you may get cheaper. Maybe you can get in again if that's your strategy and you got the funds to do so. But as far as how the paper games and what the powers that be are going to do, I cannot tell you because I don't know. Same chart, different structure. This one shows the Fibonacci from the last 67 periods and the 18-day average of closes, highs, and lows. Not much more to say. You're in an uptrend. You can't find support where you're supposed to, but you did here, which is fine. And you break through, but it didn't hold. And then you broke below, and it didn't hold. Then you broke above, and it didn't hold. And then earlier you broke below, and it didn't hold. And now you're within this sideways action, trading within the highs and the lows on this average. And it's pretty much right at the average of closes, which is 35.07. Market closed at 35.06. It's a little bit towards the downside, but it's really not slanted much down. And this had a nice upward move. This is completely neutral. I have neutral with an upward bias and downward bias, but I have no bias whatsoever within this neutral market. Next chart shows the last 200 candles. Fibonacci within the last 300 days, and then these moving averages, which are just crisscrossing each other. Same sort of deal. You're below it, you're above it. You're looking like you're trying to find support there. There's nothing bullish or bearish about this at all. It's major sideways action. You can say, yes, this looks like a bear flag and it's going lower, and maybe it might be, but I still want to at least see the support level break before I give any conviction to making it down towards not only the 200-day moving average, but that significant 25 handle. Finally, the volatility over the last, since March, the blue line represents the average volatile moves per hour over the last 2 days, and the orange line over the last 10. And what's interesting, I was stating before, okay, maybe we're going to pull up and pull off this head and shoulders pattern. No, that just didn't happen. Instead, it made a double top formation, and it's still going lower. That is, you start from point A to point B, point A again to point B again to point A. That's how a double top works. You need 3 hits of one bottom, starting with the original breakout. 2 hits in here. Now, I know it had this pattern here, but that's pretty irrelevant. And that's your double top formation. Does that mean we're going to come down to this area? Maybe. But at the same point, if we do go below a 0.5% into this type of low volatility, that's way surprising. That's not even good. That's not even good grammar. That is really surprising to me if this was to occur. I think it would be nice to have this market proceed higher with higher highs and higher lows, while it has volatility somewhere within this range. But I don't know about going down here. Maybe as a bottom point, possibly, yes. But even again, the moves that occurred really set the bar. Obviously, something's going down, and it's just nothing's gonna resolve from it. This is the beginning of, obviously, to me, it seems as if it's the currency saying goodbye, or at least ending the world as we know it. After all, the rapture's actually, I think it's the 21st of May, so you could be watching it on the day of the rapture, or maybe the day before, or maybe it's been a few days and then, yeah, nothing happened. But the the interesting thing about all of this is that this level here sets the bar. Most likely, it's going to proceed higher. And when it does that, it would most likely contain both wild moves to both the upside and towards the downside, because not every single time volatility and volume gets out of control, it means down movements. Maybe 70-75% of the time it does, but there's still 20-25% of the time when we have these massive movements and massive volume plays, it's going to bring the physical price upwards. I don't know about the paper price, because the lower the prices or the longer they get suppressed, the bigger the disconnect will become, especially as the masses awake. Take care.